Shall we? We saw that the Nigerian market reached a historic high. Of course, in the month of August, the Nigerian market was up by about 3.4%, bringing the year-to-date return to about 31%. For last week, we saw that the market was up 3%. Friday's market ended at about 1.47%. Now, let's move over to the local bond market. It advanced in yields, while European markets yield settled at around 11.03%. For the Naira, it gained to 740 Naira 38 kobo to the dollar at the I&E window. Now let's quickly move over to the United States there, where the Dow closed 100 points higher to kick off September. European markets are rising on China optimism. German DAX up 0.63%. For the Asian Pacific folks, it was mixed in early trade today, while Brent crude is trading at around 88 US dollars a barrel. Gold prices are rising to about 1,971 US dollars an ounce in early trade. Gold has really been oscillating around 1,009. What will it take to break to the $2,000 level? All right, joining me right now is my guest, Tajudeen Olayinka, who is the Chief Executive Officer at Wyoming Capital and Partners. Good morning, Mr. Olayinka. Thank you for joining us today. Thank you. You've been there for a while. Thank you.
Good morning, Nancy. It's my pleasure. Good
morning to you, Mr. Olayinka, and thank you for just waiting there. Now, the NGX, the Nigerian stock market, is the second best performing market for second quarter. That's last quarter in Africa. What is really happening to this market?
If you recall, I mentioned to you, just before we went into electionary campaign, and in fact, before we had the election of February 2023, that we had three contending forces, candidates of political parties that were pro-market. And so what that means that we are actually hoping to see a clear movement from a government that had some kind of public sector dominant focus to a new government that will probably have a private sector dominance. So market have started moving right from that, from that time when they realized that yes, even though we are having the election we are going to have election in February 2023, any of these three candidates will become president, and if once any of them become president, we are going to see a pro-market drive. And so market started reacting way back in November 2022, and of course up to this moment. So the moment President Tinubu was sworn in as president and he moved straight into the philosophy of this market, of course, market was expected to react, and so that's the reaction we are seeing, and that is what are taking market to his current level. We haven't seen anything yet. It's still going to move beyond that.
Oh, are we going to be approaching 70,000 points level for the broad index before the end of the year?
Maybe not immediately, because what we are likely to see going forward, you see more companies come to list on the exchange. You see more companies that are already listed, issue new shares, issue new securities to further deepen the market, so that we have array of securities that we can trade. And at that point, of course, you see some moderation. Yes, it may get there, but I do not really think it should get there at this time, because this is the time, or this is an opportunity for all these public companies to come and list on the exchange and raise new capital. Because at this point, we have, there is this opportunity of, raising money at a lower cost of capital, and that is what the board of any company, will always like to see. And so it's an opportunity for them. So as soon as we begin to have them, we'll see some moderation, because we now have more securities trading on the exchange that the investors can actually take into their portfolio. So yes, it will still move further up, but not necessarily that it should get to that 70%. And if you get to 70%, it will be that the foreign investors are actually in the market now, and of course participating.
Okay, so if I got you right, Mr. Olayinka, you said what is actually driving this bull run is because of the posture of this administration. No matter who was declared the president of the country, all three frontliners are market friendly or they were market-friendly candidates. Are there some other factors? Are there some other factors that is actually driving this bullish run? Because I would say the honeymoon period of the president is coming to an end gradually. So what can actually be driving this market, where we're also seeing that many of a few of these companies listed on the exchange have been suffering foreign exchange losses. Some of the companies also listed, GSK, for example, that was listed, or is it still listed, has said that it's going to exit the country because it's been suffering for the last few years. So where else is the market drawing that optimism from, apart from pre-elections, elections, and perhaps the posture of Mr. President in terms of putting the economy right?
Okay, Nancy, anytime you have a government running, adjustment program, see, let me say clearly, what the government is doing is to reset the economy. It is a normal development in an economy where the previous government had, placed too much emphasis on, public sector dominance. When you do public sector dominance, you are doing effectively is to fund your budget through debt, is to put government in the forefront of everything that we do. And in most cases, that never achieved any result. And so the moment you see a government that is private sector centric, you are likely to see more activities. You are likely to see more profitability. Anything you see now is a temporary development. Of course, we market expected that there will be that FX challenge for some companies, especially those companies that have their net foreign assets liability. Like those manufacturing companies who are ordinarily buying forex, doing LCs and not those things, importing from abroad to be able to which we normally.
Oh, okay. It seems that we've lost a connection there with Mr. Olayinka. Let's quickly take a break, and when we come back, we'll try as much as possible to see if we can get Mr. Olayinka on. All right, welcome back. We're glad to have Mr. Tajudeen Olayinka, the Chief Executive Officer of Wyoming Capital and Partners. Mr. Olayinka, welcome back. The network actually froze earlier.
Okay, I noticed that here too. Okay, so what I was saying is that the companies in the consumer goods sector, basically the manufacturing sector, and maybe some other sectors like that, including even cement, they are likely to have net dollar liability. So those companies with net dollar liability will have FX valuation challenge. But those companies with net dollar asset will normally have an improvement, and that's why you see that why the manufacturing sectors were complaining of this dollar challenge. The banking sectors that normally will have a net dollar asset will, of course, will have an appreciable movement. So that's why you are seeing that. But like I said, this is a temporary development. Once a country or economy is going through an adjustment program, you are bound to see this. I think we should emphasize the end result of the adjustment, not the beginning of the adjustment, because the beginning of adjustment is usually very painful. Adjustment program comes with pains. If you recall, Babangida did something close to this between 1985 and 1993. In fact, it started way back in late 1985 and then 1986. So that is why we seem to be having this kind of challenge, but eventually it will ease off. So I don't think honeymoon is over. Honeymoon maybe in terms of public reaction to all this or public outcry against all these policies, but these are policies that are necessary, that government must embark upon, because you cannot afford to do otherwise. If President Buhari had remained for another 3 to 6 months, probably by now we'll be having balance of payment crisis. And so if you want to avert balance of payment crisis, you need to take this, this option. And that is what happened. Most companies will react definitely, but eventually we will settle at a point where we will have a better economy.
Mr. Olayinka, what is different with this highs that we're seeing in the market from 2008? Because the last time the market experienced this was in 2008. That should be like 15 years ago. Oh, how time flies.
Exactly.
Yeah, that's like a decade and a half. Wow. I remember I was on that floor then at the stock exchange.
I remember seeing you. I
Yeah.
remember seeing you that time.
Yeah.
You and Bossy.
Yes, 15 years ago, and how time flies, and 15 years down the line, this is where we are.
It's back there.
Yes,
it's back there.
Yes. So how is it different from that time? What we're seeing now from what we saw before? And don't give me that what we saw then was attributed to the fact of margin lending and all of that. Are there other things that we can attribute to the fact of this historic high, apart from also what you've told me that Tinubu is a bull? I don't mean it literally, but of course for market participants, they understand what I mean. Apart from that, what else?
Okay, well, if you say I should not talk about what happened that time, there's a significant difference because we can't take that away. I'm not going to say because of bank credit to the market that actually made that market go to the level we saw it that time. It was also because of the policy of that government. That government too was also pro-market. The government of President President Olusegun Obasanjo was actually pro-market. It was even the main pro-market government. But the only difference between this one and that is between that one and this current government is that Obasanjo made the best use of people. He used economic experts. He used the combination of Soludo in central bank and what do you call her now? The woman in the
Okonjo-Iweala.
Okonjo-Iweala, that combination with some other economic experts that drove that program. So anytime you are running an adjustment program in this way, you need to put experts there. And I think that is the direction this current regime is also going. They are likely to recruit some adjustment consultants to actually work with the Minister of Finance and work with the Governor of Central Bank, because you need them at both ends to drive activities. The government of President Olusegun Obasanjo was largely supply side driven. It was running supply side factors. It was privatizing. It was selling companies. It was in fact he had even sold what do you call it, refineries to Dangote before he left. Until Yar'Adua came and of course discarded that idea. And today we are regretting that that decision of Yar'Adua. So anytime you see government that is pro-market, supply side driven, of course you are bound to see this kind of reaction, and of course you see a beautiful market. Okay. Market reacted not only because of that credit expansion to the market, but because of the fact that the policy of the government at that time was friendly. And so what we are seeing today is also a similar policy, but yet to feel the impact of a supply side policy.
Okay.
Supply side policy produced Dangote cement. So we are likely to also see similar action or similar policy decision for President Bola Ahmed Tinubu going forward. Okay, so that's why I said we are yet to see the bull.
Okay, so Tinubu is not yet a bull, as it were. It's not yet a bull, but I'll allow you to answer that when we come back from this break. Let's quickly take a short interlude there. We'll be right back.
I need something we go ginger me. We tom I dey breathe for it now. I dey run kilometer. That's why I dey come.
All right, Mr. Tajudeen Olayinka is still with me, the Chief Executive Officer at Wyoming Capital and partners. Mr. Olayinka, I was actually saying earlier, if President Tinubu is a bull, because at least what we've seen since he came in has been a bullish market. So we can say his animal characteristic is that of a bull. As it were, for people that are listening now, we are not abusing President Tinubu, we're not insulting him. It's a market term. Let me put it that way so that they don't think we're insulting anyone. So would you say that President Tinubu is a bull, as it were?
Yes, he is
Okay.
because even the president himself understands what a bull market does. So he's not going to take it as an abuse
As
because he knows
insult.
that when you once you have bullish sentiment, it points in the direction that you are going to have a better economy going forward. So
Okay.
the stock market is the barometer of the economy.
Economy.
It's pointing at what will happen in future, not what we are seeing now. If what we are seeing now are those pains that people feel, these short-run pains, short-run adjustment pains, so much of this pain, I don't like it. No, you would think that the market will not move. But
Okay.
in the long run, when our factors become variable, of course, we'll see more bullish market and of course, more stable market as well.
Okay, Mr.
So
Olayinka,
President Bola Ahmed
I would
Tinubu
like
is
to get
actually a
your
bull.
I would like to get your views. I don't know if you saw the news that just came in. I took it earlier. The Union on Banks, Insurance and Financial Institutions employees have directed a shutdown of banks and financial institutions from tomorrow and Wednesday, of course, for the warning strike by the NLC. How do you think that this will impact the market? And for people watching us right now, of course, we have many Nigerians that are bank account holders that do business with financial institutions. What should we expect tomorrow and Wednesday? And tomorrow and Wednesday, will the NGX trade? Have you gotten any signal from the NGX if the
Yes.
strike would affect the trading on the floor on Tuesday and Wednesday?
No stock market closed in any part of the world because of strike. So the stock market will open tomorrow. Not only the fixed income market will open. All securities markets that are linked to Nigeria will open tomorrow, irrespective of what happens with the strike. Yes, there will be strike, but the banking sector strike and will probably be limited to their general staff. The bank too will still open, do skeletal services. The bank will not even shut down completely because of a threat of strike. They have a way of going around that. And so it's not. I don't see it as a serious challenge. Of
Okay.
course, when you see employees of a bank staying out of work, of course it will slow down activities there. But of course, it is a temporary something. It will be resolved. I believe Labour and government will go into talk and resolve all these short-term pains. It's a short-term pains, and they also need to understand that. I will advise Labour leaders to show understanding, to work with government, because if you do otherwise, you can imagine a government using an NMPC to raise $3.something billion to be able to improve dollar liquidity in the FX market. It's not going to be an easy ride. Adjustment program is never a cheap party. Everybody must come to the table and show understanding. I will advise them to show understanding. I will also advise government to bring experts that can anticipate crises, that can anticipate problems that are related to adjustment program or economic research. So they need to come with experts to drive this program so that we have success at the end of the tunnel.
Mr. Olayinka, for the valuations we're seeing right now on the market, are these valuations right valuations? Are you still seeing opportunities for valuations on the market? Then number two, how should investors really position in terms of portfolio adjustment at this time? Then thirdly, we're also seeing that earnings or companies listed on the exchange are releasing earnings. GTCO and some other companies have also released earnings. Are there companies there that are really surprising you and your colleagues?
Well, I can only talk of that of manufacturing sector that are not, consumer goods sector that are not really having very good results at this time because of this temporary problem. And like I say temporary because it's a problem that we are going to really put behind us, as we move into the benefit of this program that is ongoing. Yes, for the banking sectors, I'm not totally surprised because that was quite expected. Anytime, like I mentioned earlier, anytime you have a company that is having net dollar assets, is bound to have this kind of result that we saw in GTB. The same thing we saw in First Bank. The same thing we saw in. I think a couple of them have released results that are fantastic. I'm also hoping to see the same thing in Zenith and some other companies like that. So basically, yes, for some it's a surprise, but for banking sector, not really a surprise. But for the consumer goods sectors and manufacturing sector, of course, we are bound to see that. And of course, anytime you see that, they also have to adjust their prices to be able to recover these losses. There are losses that are recoverable, because so far you don't have a going concern threat. You are still in the market, you can operate, and you can recover costs. They'll recover all these costs. These are short-term. These are what economists call short-term adjustment factors.
Mr. Olayinka, can you give me like stock recommendations this week? You are the expert. What are your stock recommendations this week? And let me also sound a note of warning to people watching us. Seek investment advice according to your own financial risk from your own investment advisors. But what are your stock market recommendations what are your stock recommendations this week?
Yeah, for those who are doing short-term trading, those one who are just who want to be active, in and out trading, they should still stay with the banking sector. If you are, for equity, stay with the banking sector and ride the bull and bear there. Then those who want to invest for the future, the consumer goods sector is yet to really have a significant showing in terms of price movement. Those are the stocks of the future. Those are the stocks that will eventually drive, put economy on its right level. And so those stocks will also move in future. So those who are looking for pension stocks and all those things, take banking stocks, take consumer goods sector stock, and few other stocks in that. And of course, oil and gas. Those ones will not get it on. Take oil and gas, and then of course, maybe some insurance stocks that are still having low prices, extremely low prices, because those stocks are still heavily underpriced. So some of them, some investors can take that too, going forward. But technology stock, the telecom sector, MTN and Airtel, and of course any other, because there have been some companies that will also be listed on the exchange very soon. So when those companies are listed on the exchange, it's also an opportunity to bring some more stock to your portfolio. And don't forget, fixed income security is also a balancing factor. Don't have a portfolio that does not take into consideration fixed income security like treasury bill and federal government bonds.
Okay, Mr. Olayinka, one last question for you. What is the best investment advice this month that you will give to people that are invested in the stock market, or perhaps that have not even invested in the stock market? What would be your best investment advice at this time?
The best investment advice is to tell investing public not to go to market barefooted. Use advisor, use stock market advisor. Don't go to market without wearing slippers, because you can match your legs, on a very sharp object. It's important to take advice from professionals who are stockbrokers, asset managers, to help you, and also have a long-term view about the market. Don't be discouraged by short-term price movement. Those things won't last. Eventually, market will settle at a point, and you see appreciable movement. Don't buy high and sell low. Try to buy low and sell high. If you want trade, and of course use market experts like stockbrokers and asset managers to advise you. Don't go market barefooted. It's dangerous.
Thank you very much, Mr. Olayinka. That advice is something we should take. Don't go to the market barefooted. It depends on the kind of footwear you will wear. Some will wear slippers, some will wear shoes. Some you may need rain boots. You may actually also need rain boots when there's chaos, So thank you for that advice. Thank you so much for that advice, and thank you for sticking with us. Thank you, Mr. Olayinka. I wish you a great week.
Thank you. It's my pleasure.
All right, I've been speaking with Tajudeen Olayinka, who is the Chief Executive Officer of Wyoming Capital and Partners. You've heard it from him. Don't go to the market barefooted. In fact, I will add, don't do anything financially barefooted. Wear googles like I'm wearing now. Wear your glasses. Look well, especially in this current economy. Be the best you can be. I'm going to change that you want to say. I'll see you all again tomorrow, God willing, this 11 to 12 p.m. on this station. I am Nnaji. Bye.